But Sachit, maybe just a quick, half a minute on introducing you so that people have context, and I can get to the specific question then.
Sure. So hi guys, I take care of the numbers part of a company called Dataweave. Dataweave is into providing big data analytics in the competitive intelligence space. I can go in more specific if people want to understand our business model. So from a business standpoint, we are a global company from our revenue terms. 80% of our revenue comes from US, about 10% from Europe, Southeast Asia, and the rest comes from India. The team is split between US and India. US has the business arm and some of our leadership team, the CEO and the US. In India, we have about 140 odd folks, especially the engineers and data scientists. From a legal structure standpoint, we are a Singapore holding company. We have 2 subsidiaries, one in US, one in India. That's long story short. If I kind of give you if you want to draw an example, we are in hybrid of a SaaS/data analytics play. So our business in that space. And from a stage standpoint, we are close to about 7.5 million ARR as a company. We've been growing twice. Let's take COVID out of the situation. And in COVID times, it's a $1 billion question where the revenue is going to go. It's an interesting times. So yeah, we are taking some measures.
Thanks.
Standing up.
I think the one key thing relevant for both you and Sada is finance as a function touches every other function in the organization, right? Whether it's revenue, collections, analytics, whatever it is, right? So just as a function head, as a CFO, what are the few key things that you're doing currently to ensure that you have control over all of these aspects, indirectly maybe, but what are the steps that you're taking in the current situations?
So let me lay down the broad themes, and as the audience wants me to ask, and they can ask specific questions I can do, but the broad theme is this. We all know that we are in unprecedented times. So what we did, at least from our team standpoint and for the role that I play in this company, what are the stuff that we have done is, we kind of set an objective, like how Sada mentioned. We are looking to ensure that we don't know how the growth rate would be now. As I was mentioning, we were growing twice year on year over the last 5-6 years now. But we don't know how it is going to be at this point in time. Revenue guidance is going to be very difficult, be it a small company or a largest company. So what we are looking to do is, the objective is, while we run the ship, we want to have a runway of about 24 months. The premise here is that we want to be ahead of this problem. Instead of we are caught between a rock and a hard place and we take some knee-jerk reactions. Of course, all the stuff that can happen on the middle line, that is the cost aspect that you could imagine, and what Sada mentioned is happening at our end as well. The key thing that one needs to, I would suggest that guys who are playing closer to the numbers need to do is, as of now, they need to have a very strong grip on the numbers. And the numbers need to be looked at almost on a weekly basis, especially the trigger points. Like, for instance, how are your contracts doing? In our case, how are your revenues doing? On a weekly basis, you need to have those checks and balances to monitor. How are your receivables doing? So basis that, what are the payouts that is happening? So on a weekly basis, we kind of monitor and fine tune our decisions. That's number one. Number two is, what I do is, for the role that I play in the company, is that I ensure that any hard decisions that we take, there is a utmost buy-in from all the stakeholders. So what we do is, whenever we take certain hard decisions. Like for instance, we have cut down on our discretionary spends like marketing stuff. But what we did is we called for a meeting. And we understood the rationale from the marketing team. We have given our viewpoint, and then let me boil down to an example. Like for instance, we do this marketing across the globe to get leads from enterprise, to get leads who are actually enterprise customers. Now, what we had as a debate in that particular meeting is that even if you do this, would you think that these guys are going to have a meeting with you at this point in time, or they're going to focus internally to see how they can put their house in the order? So the key role that at least we play is that when we take those hard calls, at least from my side, I engage into this transparent discussions. I see that there is an active, healthy debate, and then we see rationality prevails and we take those steps. So that's the second theme. The third theme is that we over communicate at this point in time. Any decisions, any significant influence to business from any side, external or internal, we kind of try to communicate this proactively much more frequently at this point in time. Like for instance, to give you an example, usually we have town halls on a monthly basis. Today we have moved it to a weekly basis to give the update. So these are broad themes. We can go drill down. Each has its own stuff that we do.
Sure, sir. Helpful.
Yeah, Mitul, I want to add, two, three more points. What Sachit was mentioning. One is on the cash flow. While we're building that, I would like to add the scenario analysis. Right? If you could prepare a base case scenario, it could look more conservative view, as Sachit mentioned, weekly cash flow, etc. You also think like what happens if this particular customer doesn't pay because he's not doing good, right? Think about that. In normal scenario, you might have a contract, you might have provide the service, he accepted the services, etc. But what happens if he delays the payment? Normal payment terms is 30 days. Now it goes to 60 days. So some of this scenario analysis has to be built in. That's point number one. And second is assess the productivity of every team, right? Before you, one is that the salary deferral, salary converting more into a variable outcome based. You also assess the productivity of every team, saying that if you have, for example, if you have a sales and marketing team, right, feet on street, can you move a little more into digital? If you have a tech team, where someone can play a dual role, right? Not just doing and coding, can they do testing as well? I'm just giving an example, say how people can look at it. So these are the two things that I would recommend in addition to what Sachit mentioned.
And just to add one more point to what Sada mentioned, that's a very good point. On the first one, the scenario plan, or what we call as stress testing the entire system from a numbers standpoint. The stakeholders who are going to do this need to be dispassionate about when you do this whole exercise. Like for instance, to give you an example, though the revenue may not drop, but you need to kind of forecast in such a way that the revenue drop. In our situation, when we stress tested, the scenario could be we could have a drop in revenue by about 40%. And if that situation pans out, what are the stuff that we need to do at in different components, or from a finance standpoint, different line items? And what are those actions that you need to do? And what are the trigger points for those actions needs to be defined very clearly. And you have to take a very data-driven approach on that. So I just wanted to go a little deeper on the first point that Sada mentioned.
Sure. So I think there's one question that has come up kind of related to this. I'll just take it up right away. So there's a question from Sam that says, is there any specific financial ratio to look at more carefully right now? So before any of you, I think it will definitely vary from business to business, is my sense. The one very key thing right now is definitely revenue and cash flows, right? So those are the two key numbers, ratios. If at all there's debt, etc., yes, maybe you'll have to look at how that debt will be serviced. But other than that, keeping revenues intact and ensuring working capital is moving is the key. It will not move as per normal cycle. There will be some defaults at some end, some of the other end, because everyone is in this together right now. So that is yes, and maybe Sachit, Sada, in case you want to add anything specifically on that.
There are several more ratios we can go in deeper, but then if you're pushing me to answer to the topmost ratio that as a finance person that you would have to look at is take your burn, look at your cash balance divided by burn, what's your runway looking like at this point in time? My suggestion to most of us, of course, as Sada mentioned, there's no right or wrong answer to this, is let's ensure that the runway is about 18 months plus, given that we don't know how the situation is going to pan out, especially from an economic impact standpoint.
So Mitul, from a very early stage companies, in addition to you guys talked about revenue and the runways and cash flow, etc. One thing that companies could look at it is historically, traditionally we talked about CAC, right? Customer acquisition cost. Probably it's the time to call it as a RAC, right? Revenue acquisition cost, right? How is that spending that 100 rupees get me that revenue or not, right? It's not just adding to the users, right? Or kind of like on the freemium model, just we put into our traction, like this many users we have in the platform, etc. I think it's companies at early stage have to look at the revenue acquisition cost. If I spend 1 rupee, is it going to get 1 rupee revenue or not?
Sure. And I think just one point to highlight from what Sachit mentioned, we have seen founders double click on every single cash flow or projection item currently. So what used to be, a little not high level, I wouldn't say high level, but medium level view is now going into a very granular view from a data perspective, because any of these decisions around revenues, costs, layoffs, etc., have to be very strongly data driven. So I think that's one thing that we've definitely seen. The other side. So while everyone's talking about cost optimization, there also needs to be a focus on revenue building. So whether it's building from existing clients or whether it's approaching new clients, there are some sectors that are doing well, edtech, pharma, etc. All of them are doing well, are in a decent position currently. So for small companies, mid-sized companies, Sachit, is there any specific thought process that you are having around adding a revenue stream? How easy it is to focus or diversify maybe a little and add a revenue stream from your existing capabilities as a company? Any thoughts around that?
Yeah. So let me just go back to your previous subject. One thing I want to just add over there is that on one side, we are just talking about the cost cutting measure because that's the control that we have. What's the balancing act that we need to do is, why are we talking about 18-24 months runway, not a runway, say 60 months down the line or runway of about 6 months down the line? Is that it's a balance. On the other side of the balance is that when does the economic impact of the situation goes out, how fast you can come back. So you might cut the fat in your system, that's okay, but you cannot cut the muscles and the bones in your system. So you need to find that fine balance. Now coming to Mitul's current question, yes, revenue, it's very difficult to sustain the revenue at this point in time because every company is going through this stuff. But then let me give you some cues which could help. In a couple of instances, it has worked for us, not in all. Let me be very candid with you guys. Is that one of our customers wanted to terminate the contract. What we mentioned is that instead doing that, if suppose it was for X months, we will give you service for X plus 5 months. So the current cash flow is there, current revenue is there. B, one of our customers again wanted to terminate. We said that at this point in time, if you feel that the service is not much of a value add to you in your system, you could pause the contract and resume. But in here, the caveat is that it's not translating into a cash inflow situation, so you need to work the numbers again here. The third aspect is, see, they say that, hey, and this happens we have seen in even US, is that we cannot pay now. We are going to pay after so and so date. So if your cash flow can take that kind of a dent or basically your working capital can take that kind of a dent, then you could accept those kind of a situation. But little broadly, it's a very difficult thing to see how you can sustain the revenue at this point in time. But you need to improvise and come on a case-to-case basis with solutions that works for both. So you need to look for that win-win in this situation.
Sure. I think small hacks that we have seen, maybe just adding a couple of points. Of course, entirely depends on the kind of revenues you're generating, but there are always two kind of revenues. One is recurring and one is transactional or such as, which is one time basically. So if at all you have a business line that has some sort of recurring revenue, it may make sense to try and ensure that you have recurring revenue coming. You can small hacks around that is take advance payments instead of accrued based payments. So month in advance if your clients are cash rich in that sense and they can afford it. These are small hacks that ensure that working capital cycle keeps ticking. For the one time.
Yes, sorry to interject.
Yeah.
There, for us, the other side works. So usually there are some customers where we have this quarterly advance and yearly advance. So they say like we cannot pay in bulk. So we kind of broke this up into monthly payments for them. So you could understand, right? So
yeah.
But also it's a cash flow situation. It's a pressurized situation for them. We understood what their situation is and then gave that solution to a specific customer. And as you're rightly saying, for customers where you can give some discounts and get that yearly advance payment, then your usually monthly stuff could work for certain customers.
Sure. So, Sachit, one more critical thing is, as virtual CFOs or as CFOs, there is a certain time allocation that we generally give in the normal world to each area. How has that changed in the current circumstances, not only for these 2 months, but going forward? I think, given that the next 12 months, 18 months, whatever we are talking about, do you see any specific areas that you would be spending disproportionate time on, or a founder should spend disproportionate time on?
So you want to take this up or should I?
Yeah. So if you look at the finance function, there are two types of activities. One is very transaction, like the day-to-day mundane job, right, in accounting and compliance, etc. as a finance person. Second is more of a strategy reporting, etc. I think the CFOs or the head of finance, or if the early stage companies have advisors, they should focus more on the second part, which is running the scenario analysis, or it could be on the strategy, right? What set of investment they have to make, in terms of the hiring. If you have to build a certain modules under the product that you are building. So I think that that's the more critical aspect right now, where the transaction, the accounting compliance has been could be morely taken care by the junior staff, etc. So I would founders should spend more on this, the cash flow scenario analysis, and how they can kind of make the right investment.
And just to add to Sada and Mitul, is that in our company, what, at least from my role, how it has changed and how it is going to be like this, how it is going to sustain like this in the next few quarters, is that two things. One, we are going to have much more stronger grip on the data. If I may say, you have a very granular view of the data across. Like, for instance, I can give you a simple example. I have started reading the CSM reports to understand the mindset of a customer at this point in time, basis the reviews our CSMs, the customer success managers, do with our customers. It gives that proactive understanding on where things can go. Like, for instance, certain customers might be in fashion vertical, and they would be quoting that our business has dropped significantly. Vis-a-vis a customer who is an e-commerce essential play, we are saying that the demand is hitting the roof. So those qualitative inputs also helps you to solidify your decision. That's one. That's where we at least are spending a lot of time to go deeper on the data. I'm just reiterating, we spoke about this. Two is, to ensure that we hear to all the stakeholders in the company. When I say stakeholders, your team members, board, investors, customers, everybody, and most of the times I would urge that for the role that we play, we need to be transparent, engage into a healthy debate, and arrive at a solution.
Sure, and I think that holds true for. So maybe I'll pick up one of the questions again here. That holds true for anything, right? Over communication and transparency when you're dealing with vendors, when you're dealing with any of your customers. So one of the questions, or employees for that matter, one of the questions maybe I'll just take up right now. Since it's related to this. The question says, just 1 second. Yeah, it says, have any of you tried renegotiating infrastructure contracts and any success in reducing rentals? So I think this is, we've talked a lot about this. In fact, a lot of companies are doing this as a first step as a reaction to COVID. Sachit, what's your experience on that? Sada, any of our company's plans experience on that?
Yeah. So Mitul, as you said, this is the first step because before touching the employee cost, people are looking at other cost line items. So the first one comes to the office cost, and they said, then, hey, we might work from home remotely, etc., for the next couple of quarters, etc. So there have been cases where they could the companies could negotiate rental for example, they said, I'm willing to sign a longer term lease now. If you have, say, for example, 1 year lease, they are saying, I will sign like 1 more year or like 2 more year, etc. And can you give me a waiver for 3 months? That's one way to look at it. And second is, a few of them kind of like got a reduction in the rent while they might have they already have a 3 to 5 year lease period, right? And then they kind of ask for 2 to 3 months reduced rent rather than waiving off the completely. So there have been cases where even the co-working spaces have kind of helping their customers reducing the rental cost as well.
Sure.
Yeah. For us, of course, again, there was a 5-week-long discussions about 10-odd meetings happened with our landlord. Finally, so we both have to understand each other's situation. Our landlord has given a 20% discount to the rents for the 3 months. And he kind of candidly said that for the investment that we make, in our company, the entire furniture and fixtures was done by him. And he has taken a loan and he has to pay back those loans. So he has a repayment commitment. So he said, max, I can do about 20% at this point in time. So that's what happened. In specific about our company.
And Mitul, one point that is that if your landlord is depending on that rental income for the livelihood, there's a very less likely chance that you could able to kind of get a waiver or a reduction because
right.
There's the only source of income. In that situation, there is I don't think so. It's fair on anyone to say that hey, kind of not to pay rental. But I'm talking about the cases where there are the corporates where there may be a real estate companies whose income could be rental income, but we have been successful in getting a waiver for 3 months or a reduction in the rental for 3 months.
My only suggestion, just to add to what Sada said, is that in such situation, I would suggest that don't get into a litigation. It's not going to work for both ways. The cost of litigation itself is going to be much higher than the savings that you're going to get out of this whole thing. So see how you can convince the landlord more from a spirit standpoint and not from the letter, and see what you can both work this out in whatever is win-win for both.
Just to add, Mitul, on this point, with respect to this fixed cost, at least what we have seen is for the time period which is under lockdown, where physical offices are not being operated. So as Sachit rightly said, try to work and speak to them on moral basis and not something which is a legal element. I think that's the only way it works. neither him or you know, everybody is affected. So it doesn't work any other way. The best part is to try to, kind of get discussion around it, because communication, maybe it's a vendor payment, rent, or employees, or anything. I think communication is the only way where it works. And we have seen where rentals have been kind of either 100% of the waivers for a month or two has been granted, or there has been a reduction to the extent of 8 to 10%, which eventually means equivalent of 1 or 1.5 month of rent. So just to be objective about the answer, this is what at least is being in trend, where people have been able to negotiate for.
Yeah, and just to add to what Varun said, the force majeure clauses in today's world has become very vague. So there are multiple interpretations to this. If you're activating by letter and invoking the force majeure clauses, it's not going to hold much water, because they would say that, like for instance, the example, they would say that, have you filed for bankruptcy, or is your revenue deeply impacted? We'd like to look at your numbers and see how it is impacted. How is it a force majeure issue? I'm saying from a landlord standpoint. These are the stuff that I have heard from my acquaintances. So as we all are saying, like Varun and Sada, it's better to see how you can work this out with your landlord.
Sure. So Sachit, one interesting aspect that you would be seeing because of Dataweave being present in US and India is, you're seeing both sides in that sense, right? What do you think are like key differences that you would have seen, or what are the best practices that companies in India could adopt or learn from, from probably that side?
Yeah, so there are shades to it, and there are some pros and cons to this, and I'll share my experience. Like for instance, the customers over there, so the whole impact starts from the top line, right? So the customers over there are more clear. They are more working in a binary fashion. Like, hey, we want to pause the contract or terminate the contract, or you want to extend the payment term to so and so date, or we want to pay by so and so date. But in India, what happens is, most of the times they're saying, hey, we are in the lockdown situation, this is happening, we are not too sure when we are going to make payment. Let's talk about it in the next week or next week and give the clarity. But yes, if you are kind of being flexible, then we don't have to pause the contracts and stuff. So what's happening is that in each of when I take the notes from the experience that I'm having with US and India, is that I'm being more finite in ways. I'm stress testing the numbers for US because we have a clear indication of where things are falling. While in India, we are trying to have multiple scenarios and then read those scenarios and see where things are. So yeah, different markets, the way they operate is different. Here, there is no risk of, the risk of pausing or terminating the contract is lesser, but cash flow issues are higher. Their cash flow is certain, but then you'll have a risk of termination of the contract. Your actions have to be alluding to this fact. This is what we have observed.
Sure. So, before we step into the investment stroke working capital cycles, etc., I think one, very interesting point that we've seen happen in the last 2 months, and if any of you have any views or thoughts on that, is there are, very decent companies, decent teams, very good products, but due to the current situation, there is no runway, and they're in troubled state as such. But on the other hand, there are other companies which are decently funded or deeply funded, could be either. You still have, the larger companies in place. And there's this whole concept of acqui-hiring, which is known to everyone, but, not too familiar, too commonly looked at as an option. In the current circumstances, are you seeing, that becoming a good option? Because I'm sure instead of shutting down entirely, finding a new home, to continue what you're doing and be of relevance to another company in some way, or probably add a vertical for them, or whatever, could be different reasons, but acqui-hiring seems to be a good opportunity instead of shutting down as a second last option or a second best option. I'd rather put it that way as well. Any of you have any thoughts around that? Have you seen that? Are you evaluating that at Dataweave, Sachit?
Yeah. So what my view at a large level, of course, we are seeing certain color of it, and I'll come to that in a few seconds. Wherever synergies are possible, and it's very much possible at this point in time, where the team is solving some problem, the gestation period for the revenue could be much higher, and maybe they are caught in a very wrong place at this point in time. We could look at seeing how, if it dovetails with our business model, we can definitely look at how this can be integrated. That's one. A slight different color is like, for instance, I'll give you one specific example is that there is a 10-member team out of Rwanda for our human in the loop stuff. We are now talking to them and see if they can do it, because everything is online for us. And it looks to be early days, but it looks to be it's going to work out for us.
Sure. So,
yeah, Mitul, just another interesting thing when you talked about this acquihire, etc. Right? I mean, one is that companies could have to look at the synergies, a strategic fitment in that, then they could take that decision. More from a early stage companies are in SMEs, the small companies. So the sound is you mentioned about there is because of the runway they have to let go people. So some of these companies are offering their tech team on a part-time basis to this, say that, hey, they're like, they're really good people, right? They have, like, it could be, very initial employee, founding team equivalent, and otherwise, these small companies couldn't able to afford to hire them, right? So there are opportunities out there to leverage these, people's skills and, get their time on a part-time basis and on a consulting basis, etc. So there are quite a few employers basically telling their tech teams, saying, hey, or especially tech, because they could work as on a project basis, or it could be on some bit on operations and marketing as well. They're saying, hey, if you're, we have this fantastic team, or etc. If you want to utilize, go ahead and utilize. The commercials are between that individual person and the other company who want to get the services. But for the smaller companies, there may be an opportunity to get those skill set, and otherwise, they would kind of like have to shell out a lot of money. So they could look at that angle as well.
Sure. So this, Sada, since you mentioned a very interesting, call we had yesterday, I'd like to share. I mean, it'll be good knowledge for everyone here. So this was the thought process of how a founder is thinking through an acquihire. So for them, it was simple. They wanted to expand pre-COVID. They wanted to expand into a certain vertical as part of their business. For that, they'd done they prepared a budget. It meant hiring of people, which would cost about 90 lakh of CTC on a year-on-year basis. And then all the other extra costs for running that particular vertical. There was a company that approached them, doing exactly that. And all they needed from a cash flow perspective was that exactly 3 crore. 3 crore, if they managed to get, it would kind of take them through the next 18 to 20 months. And for the company that is looking to acquire, it kind of solves their purpose, where they get a ready-made team and don't need to really spend on training, etc., and you kind of launch straight away. So thought process is very simple, that instead of waiting out and training, waiting for 6-9 months and launching the product, we'll now be ready post-COVID to launch it straight away. And it kind of was a win-win for both companies. So a very interesting thought process that we saw there yesterday. So just moving on, probably we can bring Varun in with his thoughts on the investment and the debt space. Varun, I think there's questions on the Q&A section as well. How are you just seeing overall funding at this point in time? Are investors looking at making new investments? If not, then when do you think they're likely to restart? Any thoughts, from whatever discussions you would have had with investors? You're on mute, Varun. You're on mute.
Thanks, Mitul. Basis our interactions with venture capital funds, investors that we work closely with, at least what we hear from them is point one, any new pipeline for now. And the focus is to kind of work very closely with existing portfolio companies, help them in any manner that is possible, maybe via direct funding, or trying to arrange some other help that they can in terms of maybe trying to arrange some debt financing for them. But the focus is clearly to spend time, the investment teams time to kind of help survive the existing companies, and so that they can thrive over this situation. As far as new pipelines are concerned, at least what we hear is basically for this fiscal, that is financial year 2021. I don't think they will be looking at all for the new companies. In fact, certain investment strategies with respect to fund allocation. So basically, the VC funds have this strategy about first checks and then follow-on checks, and they reserve certain cash amount, certain balances for a part of the fund for the first checks and the part of the fund for the follow-on checks, where they play in the winners. I think they are also reconsidering to revisit this strategy, where kind of they may skip on or reduce the number of fresh investments and try to pull in some more money from the reserve, from the fresh check amounts into the reserve ratios, so that they can fund those companies and support on and concentrate the efforts on the existing funded companies which are doing well. So Mitul, clearly, nothing can be said today, but yes, depending upon situations 6 months down the line, things may get normalized in the next coming year as far as VC funding is considered. Yeah. So as far as VC funding is considered, this is what it stands today.
So Sachit, you have, I think Dataweave has multiple financial investors on board, right? Have you had, I mean, what's the mood like over there? What's the interaction like? How are board meetings happening there now?
So yeah, interesting times. So one is investors broadly are on the fence at this point in time, basically on wait and watch mode. So what they're doing at this point in time is, if the business models are really very great at this point in time, they would like to go for fresh investments in the market. But broadly, what they're looking at is to ensure that their existing investments and any help if the existing portfolio companies want in some ways is where the focus is. It's not to kind of discourage the audience here, but it's better to take a 12 to an 18-month cycle if you're looking for an equity funding. Usually it takes about 4 to 6 months or maybe 9 months, but in the current situation, for you to close a funding, it might go over 12 months also. So you need to factor that in while running your business. So
when you say 12 months, we're saying from the first time you meet an investor to actually getting money in the bank, right? That entire process could be that long, which Absolutely. Generally would be about 4 to 5 months.
Absolutely.
Understood. Fair. And just Varun, given that equity seems tight, a lot of companies are evaluating debt, but there are some inherent challenges that one company or any company may face when looking at debt. So what are these few things that companies would be need to be cognizant of? I mean, to be eligible to raise debt, are there few things that are mandatory as such? Not mandatory from a requirement perspective, but any debt provider would look at a few aspects. What would these be?
So a couple of things over here. Given equity funding is tough to come dried up for at least new startups or for even for existing, I think that is definitely the good option to evaluate. There are a couple of debt providers who has come up with working capital loan and equivalent options. I'll talk about one or two which we are actively working on for a couple of our clients' portfolios. So SIDBI COVID-19 startup assistance scheme is something which where we are actively working on. As far as so basically the purpose of that scheme is to grant a loan up to INR 2 crores, and for meeting their working capital requirements, payments like salaries, rent, wages, other overhead expenses. It is not to fund the growth for sure. It is just to fund the existing payment cycles. The terms of the scheme, basically they have kind of certain eligibility criteria. So this is more applicable to a few matured startups and not somebody who would have who is a very young startup. So the important criteria or the criteria for qualifying is it should have a turnover of in excess of 10 crores up to a max of 60 crores. So they want to fund startups and not large companies again. So there is a min max turnover limit. Second, it has to be a startup registered, which means it has to be an innovative startup as defined under the the DPIIT scheme. Thirdly, it comes with so of course the interest rate is low as compared to other market funding options, which is around 10.5%. So one can evaluate, consider those options. Likewise, there are other working capital funding options, which is invoice financing. There are good number of rather handful of funding invoice financing options which one can evaluate, so that the working capital cycle is not blocked, and the business growth is business is continued. So Mitul, it's very customary case to case. But yeah, I think one important point would be don't feel shy, don't feel even if the conversion ratio is let's say 1%, try your best to get it done. Try to put your hand on multiple such options. You never know which one may click. Given the data requirements for most of these options would be very common. Try to dedicate some effort around it, so it may help build the runway.
So Sachit, an addition of servicing a debt as a line item in a projected cash flow, how big an impact would that have? How seriously, or how good or bad would that be? So if companies are looking at raising debt, naturally servicing that without any foresight of revenue could also become a challenge at some point in time, right? So how are you considering it? Is it one of the consideration sets when you're evaluating for any of your companies?
Yeah. So at least from my view is that if you as a company are looking for debt and if the options are available on the table, if it is going to only extend your runway by 2 or 3 months, then my view is that let's not even get there, because the terms are quite onerous. If suppose you're not able to pay and the event of default gets invoked, the control of the company goes to the firm. To give you one specific example. But then if it helps you to build a very good cushion, say, I would say about 9 months plus as a runway, considering the uncertain times that we are in, you might want to double down on the certain components. Like for instance, there is some product aspects that you would want to invest via your engineers. So by the time we come out, we are ready in the market to go to market with this product. And if it helps from your runway standpoint to extend it by 9 months plus, in my view, then you should be looking at considering the options. And plus, as Varun and Sada also indicated a little bit, is that the cost of capital to raise this debt is quite high at this point in time. The numbers need to work out.
Mitul, similar thoughts. If you are not increasing the revenue by taking this debt, I think company should not look at it. Or even, or maybe other option is that, other investment strategy here is that if you are building something very relevant to your customer, right? And in the current scenario, you have a certain business line, which is like, through which you are unable to, service the customer needs, and your product and service are not selling, you have to pivot it, right? In such scenario, if you think that, hey, the product and service which is relevant to customers and you'll be able to generate revenue out of it, I think we should explore that in addition to the runway, like, as Sachit mentioned, like, if you are looking at 3 months, and you should not look at it if there is a 6 months, probably it may be another option.
Sure. And just one from a finance perspective, the one pushback that is generally there is to defer compliance cost, to defer internal audits, controls, setup, processes. Kind of try and defer all of that, because all of those are more of good to haves and not must haves at this point in time. Are you seeing that as common? Do you think, because we get a mix of founders where certain companies are large, certain companies are small, but stat compliance is eventually everyone has to kind of honor, right? And those keep on piling up, and then all of a sudden 6 months down, 9 months down the line, the government has given some benefit of allowing a little late payment at reduced interest costs. How from a cash flow perspective, how are you looking at that? Are you looking at stat compliance as a possible deferral at this point in time, or would you kind of count it as good as employee cost and pay it off?
So I think the cost of non-compliance is much higher than the cost of compliance, and if you look at any day, right? So I would recommend all those mandatory compliances and has to be taken care, and then rather than deferring. If you are, as you mentioned, like another one, like an internal audit, it's more often like nice to have. More from a control standpoint, if there is another ways how you can kind of like if you make sure that you look at the reports every day, you look at the kind of numbers on a weekly basis. Now, if there is a way you can put certain controls internally rather than having an external advisor or an auditor looking at these numbers, I think you should reduce those costs. But the regular compliances like the tax deducted source or a GST, etc., should not be deferred.
Fair.
And just one thing which I kind of want to mention is I'm sure most of them would know, but there is this also the startup community, which is investors, startup founders have come together and launched this scheme which is ACT grants. The purpose of this ACT grant is to kind of facilitate those companies which are working directly towards helping come out of this pandemic, which is multiple efforts. One, it could be either reducing the spread of this disease, all the ideas related to that, all the ideas, efforts related to that. Second, it could be in terms of helping the healthcare workers in coping up with in terms of increasing the PPE kits or similar other efforts. Thirdly, it could be kind of providing medical assistance from being at home. So for those affected patients which are not required to be visiting the hospital but can be treated from home. So any efforts, ideas on those areas, any efforts around treating the critical ill patients in terms of either the ventilation capacity or similar other things. So one of our client has got this ACT grants by the name Ethereal Machines. So this again, this is another thing which grant in the range of 25 lakhs to 1 crore has been given to companies who are directly associated and working for helping and coming forward to help on such efforts. So so people should be mindful about these as well, and should take notes of this. If there are anybody who is already working on similar things, then please apply for this. As per the current data, I think some 1,000+ applications have been made, around 75+ grants have been made. So definitely there's a chance over here.
Sure. I think just since you mentioned it, in multiple times, I think for all those participating here, given that these must be pre-seed stage companies, I think this Startup India registration is something that everyone should definitely look at. There are some small benefits, and like Varun mentioned, things that SIDBI is evaluating, they're all qualifying it through the Startup India criteria. Income tax has various provisions. Company law has various provision exemptions based on this Startup India criteria. So I'm sure a lot of them will be meeting it, and it's a fairly straightforward process, completely online. And I think every year. Each and every founder definitely on this group should probably look at that for sure. Just probably I think Sachit, Sada, Varun, any other aspects that you would like to cover, or else we can probably move on to a few of the question answers. There's 2 people who've raised their hands as well, and a few questions as well. If at all any of you want to add anything, we can do that first and then take on the questions.
I think we should spend time answering the questions. That
Sure.
would be more relevant, I guess.
Sure. So I